Let's get started. Thank you all for joining the latest session of Restaurant Finance 101. This is our fifth session. We're going to be going over budgeting and how to budget for your restaurant, especially as we get into fall and get back into the busy season, into the swing of things. We're hoping that these tools will be really helpful for your restaurant in order to plan and make sure that you guys are prepared in providing targets for your staff and all together determining what pathway you want to take your restaurant in this season. If you don't know us already, we're Paper Chase. We're likely your restaurant's accountants. We've been doing this for over 30 years. And what we've found over the course of our experience is that when we're able to provide the knowledge that we've gained to our clients, they're able to therefore better their restaurants and also better their careers. So that's the whole point of this webinar series. That's why we've been putting this on, and we're really grateful for you all for joining. So I'm going to jump into kind of our schedule. So ahead, we have just some quick introductions. Then we're going to talk about, why budgeting. We're going to discuss some of the things that you need. And then we're going to jump right into a simple budgeting template. So Dimitri and our team have put together a budgeting template that you can use for your restaurant. We're actually going to go ahead and send that Excel over to you after this session. So you'll be able to put in your own information and make a budget yourself. He's going to be going through the whole thing and showing you exactly how to use it. After that, we're going to discuss reforecasting and variance analysis, and then we'll talk a little bit about the budgets that we make at Paper Chase on behalf of our clients, kind of the expert level of budgeting. And then we're going to have a Q&A. So if you have any questions during the webinar, if they're burning and you can't hold it in, you can go ahead and drop it in the chat and we'll address it. But if not, if you can hold it to the end, that would be great. And we'll have a full Q&A. You can ask us any questions at that point, whether or not they have to do with budgeting. You can ask our experts. So without further ado, I'd like to introduce my wonderful colleagues, Dimitri and Rahul. Go ahead and take it away.
Hi, everyone. My name's Dimitri. Thank you for those that have joined the call. If you happen to notice an accent during this webinar, I grew up in South Africa, but my name is Bulgarian. So I was born in Bulgaria, but I've lived in America for the last 16 years, joined Paper Chase about a year ago, and my hospitality finance career started about 6 years ago, where I really have helped on M&A advisory, fundraising advisory, and also on our FP&A and CFO services at Paper Chase. So having said that, I'll lead it off to Rahel to his intro.
Thank you, Dimitri. Thank you everyone for joining. Good morning. Welcome to the Restaurant Finance 105 session here with us today. Again, my name is Ruhel. I've been with Paper Chase for almost a little over 7 years now. My hospitality accounting started pretty much right out of college about 15 years ago. Worked at various firms before I found myself here at Paper Chase for the last 7+ years. Again, thank you all. Welcome, and let's begin. All right. So to start off, you may be asking yourself, why do we need to create a budget? A budget is essentially a forward-looking plan for the team. It provides them direction, provides them guidance, something they need on a day-to-day basis to be able to attain those goals and targets, right? In order for them to attain it, obviously, they would require some sort of guidance and benchmarks to be able to achieve those goals. So it also provides targets for GMs, chefs in the back of the house, and it gives them analysis and also some directions going forward. There are a lot of managers and chefs, when you hire them, obviously, there are some sort of bonus incentive. They're incentivized with bonuses as well. So obviously hitting those targets not just benefits you, the operators, it also benefits them individually as well, right? It also gives you a platform to be able to make you, the operators, a platform to be able to make short-term and long-term business decisions. So this way you can forecast, set targets, goals, and understand what kind of big expenditures, if any, that you will need to obviously plan for. This essentially allows you to not operate blindly, and it definitely makes those big business tough decisions that you have to make on a daily basis a lot easier. Last but not least is it also enables you to sustain cash flow, right? So if any big expenditures are on the horizon and you know it, at least putting it on a budget or at least planning for it allows you to have the cap space you need, or at least the financial stability to be able to make those purchases and modifications into your restaurant.
Great, thank you. Thank you, Rahel. Let me now lead into like an easy budget template that you guys will be able to use after this call. So let's just share our screen over here. Okay, so we've created a simple budget template for everyone to be able to plan both the end of this year and the whole of 2025. So over here, we have our paper chase table of contents page, where is really your home base to review what's the contents of this file. So you'll be able to skip through to each separate tab in here. And we've also added in a guide to tell you a little bit more about each tab. So we're going to go over the reporting capabilities at Paperchase and what we can measure to help build our budget, our assumptions, a deep down on sales review, a deep dive on the operating expense budget. And then finally, we have obviously our P&L and cash flow summary, a high level view of our P&L. And then we also have some interesting market information that you can also utilize. The goal of this is for you guys to be able to put in your inputs in terms of your forward-looking assumptions. And then you can also put in your actuals, and we've made it relatively simple in terms of putting in some headline cost categories, and then your day parts and your sales metrics. An important thing in terms of our paper chase files is to understand the formatting. So blue text figures are going to be inputs or hard codes, which means that you can type numbers in on the blue text. Black text will be formulas on the same sheet, and then green text is coming from another sheet. So if you're looking at the sales detail tab, and then you're looking at your summary tab, you're going to see some green text, which means it's coming from a separate tab. So having said all that, let's just dive into our reporting tab. This is an information only tab, so you don't have to change anything on here. This is really the reporting analytics and the capabilities we have at Paperchase, and we've shared some examples down below in terms of, what we can do as part of our services in tracking certain things to help you analyze both your revenue and your costs a little bit better. So we have over here, we can do multi-store, individual, of course. We have some useful resources that you can refer to. Heading into late in the year, we're going to be updating a lot of these links on our website, particularly on market information and what's going on in the industry. Down below, we have used today's template to really model by order mode and the day part. So we want to bring in information about dine-in, takeout, delivery, and then we're going to look at lunch and dinner in particular. Again, as part of our KPI reporting in our FP&A division, we do track a lot of metrics over here, and you can always email us with questions after this webinar. So looking at this, we're going to move to our assumptions tab, which is really the home base of the assumptions that we want to go over today. So over here, we're going to bring in some information about our restaurant. If you don't have too much seat count, you want to put in your estimated capacity in terms of throughput at your fast casual concept. So that should be a lot higher than a seat count and table turn. So it may be, 150 or 200 where you're starting to understand how much throughput you can do in a day part to understand your capacity. For this purpose, we've used an average amount of a restaurant at about 4 million in sales in AUV, which means average unit volume or total sales per year. So here we look at a quick little summary where if we change assumptions, we can look directly at what's going to go on in 2025. We have some key outputs as we make changes. We can look at our beginning balance for the year, our ending balance, some EBITDA targets, and an EBITDA target margin. So moving to revenue drivers. Over here, we've set some assumptions that can be used in terms of dine-in volume growth, takeout volume growth, third-party volume growth, which means how many more guests can we get into our restaurant in these particular order modes. And particularly dine-in, we wanted to use an example of how can we improve our lunch day part? What efforts are we making in terms of extra marketing or improved loyalty programs to drive the sales? Finally, We have two buckets for price. One is we raise all menu prices by 3%. And the other one is average check price growth. So can we train our servers or our GMs or our teams to upsell and try drive our average check price higher than it is? So that means that they're actually ordering more items or more expensive items on the menu to help us maximize sales while guests are in the restaurant. Table turn capability. So we want to understand what's going on in terms of how full we are at each day part. So we will skip forward soon where I will show you how we can track it by day part. And you should really set yourself some goals once you review your last 18 months in driving a particular day part at a particular order mode as well. Over here, we look at full year 2024 as well. So we need to complete our year so that we can budget out the remainder of 2025 as well. So we have our food sales mix beverage, and then we just use a simple assumption on our growth rate for sales for 2024. We will go into this trend a little bit now, but we're looking at 2024's figures haven't trended that well in our example. So we want to be using a conservative metric here so that we have a good understanding of our cash balance heading into the end of 2024. So we want a conservative measure to close out our 2024 figures that's matching the trend of our current performance. Finally, we have some cost drivers where you'll input your actuals, but here we have our targets based on theoretical food costs from menu review, where you can line up all your items, really dive into your recipe costs, what's been going on in 2024, and set some targets for the next year. Labor, we've kept it simple here as well for you, setting targets, setting manager targets. Am I going to change my team? Am I going to lower costs there? Maybe move more people to hourly, maybe move more people into director roles and then increase my hourly staff. Finally, we have an operating expenses deep dive tab where you can go into each category and analyze your percentage of sales, or is it a fixed expense and I have an agreement in place. Finally, we have some occupancy and lease assumptions, and then we have our below EBITDA line items so that you can make some changes here. So once you've reviewed the assumptions tab, the next key step is really going to the sales review tab and inputting all your information. And you're going to put two sets of information in here. You're going to put in your guest count traffic. So how many people are coming into your restaurant. You can choose to do it by day. So you're going to go to this button, go to sales actual inputs in this tab. So you're going to come down here where we have our restaurant utilization. So we're going to go to dine in at lunch, and you're going to start putting in how many people came in during P1 on a Monday, how many came in on a Wednesday. If you don't want to put in the days and do that level of work, you can just put in the total. So how many people came in at lunch during dine in P1 and have that amount in here. Then you'll have your net sales, which you can key in, and then that will obviously drive your average check price. So putting in that example, then you have, you take a step back and you can really look at all of your sales summary figures, which will be in this tab by net sales, guest count, average check price. But then also in your order mode, your day part, your guest counts, and then your average weekly figures, and then your average check price figures. So this will be a real deep dive into your sales review. And we have the quarterly all the way to the right. We are really zoomed in right now, but once you open this file, this will be a really useful tool for you to use as you do deeper dives into your sales metrics. So having mentioned table turns, let's go down to the capacity we're looking at this restaurant. So again, looking at our example data, we can look at how we are performing at lunch dine-in automatically based on our table turns of our 70 seat count restaurant. And here we can see that we're really not that busy during particular lunch day parts. We can obviously see a trend over here of the weekends. So what can we do to incentivize corporate customers to maybe come in during the lunch day part? And then our growth rate heading into next year will address that, where we're trying to increase that growth rate. Again, if we move to the annual figures, then it will be all the way to your right, where it's adding everything up. This will be for dinner as well, much better performing segment. So we highlight everything in green above 1x over here. Okay, so once we've looked at our sales assumptions, again, we can go back to our assumptions. We've put that in, that will flow into that sales review tab. And then now we can go and take a step back, and it helps to skip through to the P&L Quick View tab to look at a clean output of all the work that we have put into our assumptions. So we can have our P&L accounts over here. We have our volume growth. So driving all of that lunch growth in dine-in has increased our guest count growth by 5.7% overall. And our average check price improvement is at about 4.9%. So net sales, we're looking at about an 11% target versus our current year. And we're looking at putting everything into a clean snapshot to get to one key metric that we focus on a lot at Paperchase. And once we get to our EBITDA targets, everything's been assumed at relatively conservative growth rates in terms of cost, where we've reduced being conservative in our estimates. So now we're looking at our margin analysis, which finally comes down to a change in net sales and a change in EBITDA. So what is that flow through for our target? It's about 30%. So again, coming back to this assumption, what efforts are you making to achieve this growth? So we've said we want to use extra marketing costs to drive sales. So over here, we look at extra marketing costs. So we've increased from almost no marketing in the current year to almost 1% in marketing costs, which has helped drive our sales. Obviously, we need a good campaign, and we can track that as we go along in 2025. But we've kept everything else relatively constant, with some slight increases actually to be conservative. Again, we want to be conservative when we're budgeting on the expense side and more optimistic on the targets for the sales side, with intentional efforts to drive sales. So here we look at this key metric, which is really important to understand heading into the next year, as we are driving 123 to the bottom line from the increase in sales. Okay, so now P&L Quick View is really a quick snapshot that you can always get to if you need to take a step back and review what's going on in your file. But really, the engine of this is all going to be in the P&L and cash flow summary, which again, if we come back to the cover, we're going to lock our budget in here, and we have a historical P&L view with optional manual edits. So you're going to put in your actuals, and you're going to put in there's some spaces for you to put in cash flow assumptions, interest expense assumptions, debt assumptions that you know of, so that you can really get a clean view of your whole budget heading into next year. So we've created a very easy to follow sales summary in terms of average weekly figures, so you can understand your seasonality trends. Then you've got your auto modes, so you understand what's coming into your forecast heading into the historicals and the future day parts. And then again, we have a sales by food and beverage mix. And then again, we've all seen P&L, but in here, you're going to put in your actuals so that you can put in your particular restaurant that you want to budget. You can just copy this file to do your second, third, fourth locations and use it again and again. Over here, next, we'll go into the OPEX tab and show you how that works. But in here, everything will flow through again in terms of your historical, so that you can look at your trend. And here we have our occupancy, everything flowing down all the way to free cash flow, which is the most important not just EBITDA, but here we're going to look at the flow through from net income, adding back depreciation. We have a CapEx reserve, working capital items, debt principal payments. So finally, we have a free cash flow amount each month or period, and then an ending cash balance. We also have a useful segment for you to look at your customer loyalty. If you are tracking that, we do have a placeholder here where you can look at how many new customers did I have in the period, how many are returning, how many do I still need to categorize or need to capture into a system that I'm using. So this is always a good output tab for everything that is coming in through all the tabs in the left. So let's look at OpEx next. So again, we can click back to cover and understand, okay, what's in the OpEx? So this is a detailed operating expense breakout. So let's go there. And we have added some notes for you in here. So import your operating expense actuals of the last 18 months to review cost trends. So we have our paper chase chart of accounts over here. So we've brought in all of that data for 18 months so that we can review this in detail. Again, taking a step back, we've included all of the detail down below. So we need to open each expense category grouping with the little plus sign. So we're going to go to an example next. So let's look at restaurant operation supplies, a common, relatively high expense category. And here we have a per period amount column, percentage of sales column, which is generally our preferred method for most variable cost items. So as you're growing, you may want to either add improvements here if you really feel you can make a change to a supplier or a process. But generally, we use the last 12 months as a conservative measure that really takes care of any fluctuations that may have happened. Again, we want to model conservatively. We don't want to say that we're going to improve by, half a percentage point, and then we're wondering why our variance analysis to EBITDA is not realizing itself heading into 2025. So again, the assumption is in here in blue text. If you want to put in a minimum amount and understand kind of your risk in a downside scenario, we've put in a minimum amount, like what am I gonna have to spend on this category to understand that as well. And then everything will flow through based on the sales, which we've brought in row 31 over here. So you're gonna have this for all of your operating expense sections for the variable costs. We move to a fixed cost category. Let's use perhaps insurance. You're going to want to go into your contract and review how much premium am I going to pay heading into 2025. We've just used the simple assumption here, heading into something that you can type in where you have confidence exactly what it's going to be. Another one like that is obviously our lease, where we're going to know, okay, when is my rent going to go up? Is anything else going to go up in terms of my property tax or insurance on property? You can again place everything into the blue text, whether that's in 2025 or in the remainder of the year, if you are aware of any particular expenses coming up. Perhaps you want to plan some legal fees or tax fees, everything is in here. You just click the little group sign and you fill in your data. Okay, going back to the cover, again, we can use the links. How do we understand, what the market is saying in terms of sales growth for the current year, and where have things been trending is often a question we get from clients. So we've created a very clean market comps view for you guys so that you can actually look at particular segments and how they've been performing pre-COVID and post-COVID. We actually have included this in our newsletter as well in the past, and we will have 2024 Q2 updated relatively soon, as most public restaurant companies have reported Q2. So stay tuned on our website there, and we will probably have these graphs updated by that time, by the next few weeks. So looking over here, we see that QSR rebounded really strong, but generally across the board, same-store sales in all segments throughout this year have not been as high as they were last year. So that's why we wanted to have that -5% growth in terms of completing our 2024. So again, we are using market information to reduce our risk in terms of EBITDA and sales heading into the end of 2024. And then we want to set a tangible assumption. Again, you could also just have a downside scenario here and put your volume growth at 0 to really review your risk in terms of cash in. We can quickly make that change if we wanted to, and understand, what the key outputs are as you make changes in here. So this is a useful tool to better understand your business, and particularly to really fill out the sales review tab so that you understand where your sales is coming from. So having said all that, again, this will be available for your download. We also are always available to answer questions. So I'm going to hand it back off to Rahel to move on to the next phase of our presentation, which is just going to be a little bit of a recap on what I just talked about and how it ties into our accounting function.
Thank you, Dimitri. All right, so thank you for going over the material. Of course, maybe a lot of information for you all. So we just want to recap, bring it back a little bit, and go over exactly what was discussed, right? So in order to prepare the budget, obviously we'll need to be prepared with a prep list, or checklist rather, right, of items that we'll need. So the top liner for revenue, in order for you to come to that final bottom line number of revenue, you'll obviously have to know what the seat counts are, total covers for day, different revenue centers, day parts, volume of guests, and also average spend per guest. That will enable us to get to that total revenue number. For cost drivers, you will obviously have to have a good overview of the menu. You'll need to know what the targeted calls are and what you want that number to be, and how we want to obviously set up that number going forward. Labor, you will need to know your job types, different departments, and how many employees you will need per cover to be able to obviously sustain that guest, right? Then following that is the operating expenditures. Again, as Dimitri mentioned, this can be broken down into two parts, which is your fixed and variable expenses. So your insurances, your rent, all of those fixed expenses will pretty much remain as is. However, something that you may want to look into is your lease agreement to ensure that the lease is not expiring at some point during the year. If so, obviously, you will have to forecast that into your budgets. Lastly, all the variable expenses is where you can probably gain some efficiency, seeing how the numbers are, how your restaurant has been performing. Based on that, we can obviously make it, the best guess that we can possibly do in order to create the budgets. Third is the cash flow. Understand what kind of expenses you will obviously have to be prepped for. So if you have any capital expenditures that you're planning, whether it be the build out of the restaurant or some sort of modifications within or outside. So obviously we'll have to forecast that into the budgets as well. Consider all debt payments. So if you have an outstanding loans or interest payments, obviously you'll also want to factor that into your budgets. Last but not least is the outstanding and all current liabilities. So if you have any big lawyer fees and invoices from law firm or for any professional fees, etc. So obviously we'll have to forecast that into your cash flow as well. Last but not least is the market segment analysis that Dimitri referred to. So the public markets, know your surroundings, know what's happening within the restaurant space and also your different sectors, right? See how businesses around you are doing, how businesses similar to your concepts are performing as well. So then obviously you can make the best possible budgets for your business going forward. All right, so this now brings us to the variance analysis. You may be asking yourself, what is the variance analysis? Variance analysis is you looking back at the budget that we have just created and comparing that to the actual numbers to see how we are performing, right? So if you're looking back at the variance analysis after, say, first quarter of the year, you want to go back and see what your actual budgeted revenues were. what your budgeted expenses were and match it to the actuals to see if you were within line. If your sales is over 1 or 2%, it's over and under, you want to make sure that you're obviously staying aligned. If your business is obviously you're projecting an X amount and you're now over budget by 5% and your revenue has gone up by 5% in comparison to your budget, you want to obviously maybe want to reforecast, because at that point, everything down below can now be pretty much thrown out, right? It's not that it's going to be thrown out, but at least some sort of modifications are going to be required. So you want to make sure that you're at least hitting targets. If not, reforecasting may be a good idea, right? And also that also enables you to go back and look into some of the items. For example, your cost drivers. So for if your COGS is going up, going down, that's something that can be an inventory file adjustment related. So we will go back and revisit the inventory file to make sure that your counts are good, your stock counts are good. Also, you may also want to go back and look at adjusting menu prices. So say, for example, you considered a 3% increase because of inflation. Now inflation has not stopped, the bleeding has not stopped, right? Perhaps looking at the menu pricing again will be a good idea at that point, right? Another thing you may want to do is consider switching vendors, for example. If Baldo, you're purchasing something from Baldo and US Foods is providing the same item without you degrading the quality of the product, maybe that's something that you also want to consider. That happens a lot with like paper supplies and operating expenses, so something for you to look into. Last but not least is the labor, right? So obviously your chefs, your general managers, AGMs, they all have targets. So just making sure that they are sticking to their budgets, sticking to their targets, they're not overstaffing, understaffing, because both can hurt the business one way or another. You never want to overstaff, you never want to understaff. So just making sure that you having that science down to down pack is definitely something that's critical to making sure that you're forecasting and budgeting properly. With that being said, I'll punt it back to Dimitri to talk a little bit about reforecasting.
Thank you, Rahel. So reforecast is recommended to do in Q1 or Q2, again, if there are material changes in your P&L or your cash flow, where you want to have that visibility into the risks of running out of cash. So if there are, consistent negative variances, you do want to probably just save as that budget template that we've provided. And you can just, again, roll up your actuals all the way through 2024 and 2025 Q1. And then you can use the file again to reforecast your 2025. Then you have a budget and then you have a reforecast amount, which then you can use as your variance analysis tool moving forward, so that you're not consistently using a budget as your variance analysis because it's not as useful. So you want to lower your amounts or adjust your amounts so that you can retrack your actuals to a reforecast column. So again, at Paperchase, we do help clients with this. Throughout this year, there have been consistently negative sales variances to our clients' budgets. So we needed to either reforecast the remainder of the year, or we even created a plan heading into 2025 while we were at it, just so that we have that visibility into the long-term cash of the business as well, whether that's also looking at the debt payments on the business, capital expense needs heading into location growth. So it's important to have that probably biannual or quarterly review of your forecasting process. Next, we'll move to a little bit more advanced budgeting and the work we do on particular clients. Again, we have multi-location budget with the full 3-statement modeling. So we will factor in, your asset schedule, your working capital, all prepaid insurance needs heading into 1 year to 3 years to 5 years, your location growth plan, scenario build outs where we are looking at, base case, downside case, upside case. So we're looking at a quick trigger. Okay, if sales go down 30%, what happens to my cash in an instant? That is part of our budgeting process where you can review that at the click of a button. And then we also do, since a lot of clients have hospitality groups, and particular investor distribution requirements. We do help with understanding how that waterfall distribution needs to be forecasted and adhered to. And next, we'll go to a detailed budget. Really can be used for a new opening location and an existing location if you know your metrics and you want to if you want to adjust something in the restaurant in terms of day part, in terms of revenue center, in terms of order mode. So I will share that next. This one is not available for download, but if you are interested in learning more about this FP&A function and how we do build out these models, feel free to email us and we can definitely go over it. But yeah, I'll go over a quick snapshot of our detailed budget, particularly for a single location. Let me just go share my screen. So here is our financial model package. And here again, we have a clean table of contents with all the information where we'll introduce the restaurant. We have a capital budget. We have a dashboard. We have a P&L annual. We have a monthly. We have a break even. We have the sales assumptions. We have a variable for staff, fixed staff. So everything in here, again, in the table of contents. And then we have a capital expense section. So as you open in new locations, you want to really be on top of your project spend. So let's just skip to this real quick. And here we have an original budget, design changes, locked budget, and then tracking with our accounting team at Paperchase to make sure that, we understand our variance to the capital expense and the pre-opening budget as we're about to open a new location. Again, back to cover, super easy to use. And we go to our intro details to collect all the information for a restaurant. It could even be the timeline of when it's going to open so that we understand our capital need. We have a holding company structure. We have our real estate info so we can help on the lease as well and understanding if it's a fair lease in terms of the comps for sales per square feet. And finally, what our clients really like to look at is, again, a clean one-pager comparable tab to look at how this stacks up to the existing locations and what it looks like during ramp up and then stabilization. So here we have, again, a lot of those key metrics that we all know in the restaurant industry in terms of sales, prime cost, OPEX, EBITDA before rent, EBITDA. And then we've added some metrics that perhaps most clients don't pay as much attention to, but free cash flow, return on equity, and then return on your cost as well. So if you have financed this with debt or equipment financing, it's also good to know what the project is returning itself in terms of the total amount, including pre-opening cost per year. We have all the easy metrics that we've gone over in terms of day part, food and sales mix. And then finally, we have a nice dashboard, which clients like to just flick back and forth as they adjust the assumptions for their new opening. And then you can look at during stabilization, what are your targets in terms of sales and operating profit? And then when am I going to receive project payback in terms of cumulative cash flow? So when am I going to be paid back for all of the assumptions that are put in? Let's look at the assumptions and why we call it the detailed version, because we really do think of the core inputs at a restaurant. So we have our sales centers in terms of seat counts. We do have obviously our order modes that we went over earlier, and then our day parts as well. Finally, then we have some capacity counts as well. So if we are a fast casual, you may have no seat count, but you have a capacity count, which then will help measure your throughput at your restaurant. Finally, we build out our check average, which a lot of you probably have seen, so that we understand what is the average spend per guest. And finally, this all rolls into a day by day and day part analysis of when are we open, when are we closed, how many hours are we open for, which then drives into our sales summary for your restaurant. So if we skip down all the way to a sales summary, you will have a clean view of your sales metrics, almost as if you're in Toast, but looking at your average week, which then flows into a seasonality of your city. So everything is in here in terms of building it from the bottom up by the hour. And then I will touch on our labor by cover modeling. So we bring in all the volume of the covers. So how much volume are we going to have at a particular day part? And then we back into kind of a schedule of how many covers per staff per shift. What's the minimum number of staff I need during that shift for, in this case, lunch or dinner? And am I basically adhering to, my labor budget targets that we went over earlier, and using your existing staff, existing location as a threshold as well. So again, everything then flows through to a P&L. So everything is in this file, and then we do also present these documents as presentations to investors or to board members or founders or restaurateurs. So we really have stress tested this type of work across the restaurant industry in terms of the executive management and investor community. So we just wanted to share that sample with you. And now we'll kind of move towards the end of the presentation. I think, let me just give it back to Rahel and Caroline.
Thank you so much, Dimitri. In my screen. Thanks so much for sharing that. As I mentioned earlier, we will send you all the budgeting template that we went over earlier in the session so that you can create your own. But if you want help, if you want something that looks a little bit more similar to what Dimitri just shared, please don't hesitate to reach out to us. Our budgeting services are pretty affordable and we would love to help you. Also, don't hesitate to reach out if you have any questions about the DIY template that we're going to be sharing as well. We want to make sure that you guys are successful in using this and that it's a successful template for you all. So now we can jump into the Q&A portion of our session, and we'll wrap it up after this. So if you have any questions related to this or anything else about restaurant finance, please go ahead and drop it in the chat or request or raise your hand. We've got our first question from Joseph. Joseph, I'm going to let you unmute. Go ahead. Hey, Joseph.
Hi. I just saw on the last one, it was just a term I haven't really seen. I'm not familiar with the waterfall somewhat recently on the one of the last pages you showed us.
Okay. In particular, do you have a use case for it currently, or do you just want to know about it in general?
Well, I think it was like 4 slides ago. You had it under
Yes.
prime cost, OpEx.
Yes. Yeah.
I'm not familiar with that term, so I didn't know what it's referencing.
It's just sometimes clients that raise a particular amount of money for a restaurant will prioritize payment back to their investors before they pay themselves. So you can pay your investors, let's say 90% of the distributable cash up until they get paid back their money so that you lower their risk. And then once that step happens, then as the founder or the restaurateur, then you can get, whether that be like 60 or 50% of then the distributable cash in perpetuity, is a pretty common financing structure for clients of our size. So it's called a waterfall in the sense that you have free cash flow at the top. At the beginning, it goes to investors, and then a portion goes to you as well if you've invested money in your concept. And then in step 2, there can be a flip. So maybe 90-10 at the beginning, and let's say 50-50 in step 2.
Got it.
Thank you so much for your question. Anybody else have a question for us?
I think we've got a question in the chat. It says, what if I have different concepts, like say you have both QSR and fine dining, and how do I create a roll-up budget around those two different concepts?
So you would use this budget template, one of each. So you almost have to have a prototype for your QSR and your fine dining. Then, as part of our budgeting services, we will consolidate all your locations into a roll-up holding company group. So, of course, the metrics there in a roll-up are really geared to understand your cash flow needs more so than utilizing the metrics, because they're going to have different qualities. So you need to have your consolidated QSR brands all in one consolidated entity, and then your fine dining ones in one added up entity as well.
Awesome. Thank you, Dimitri. We have a question request from Lisa. Lisa, you are on the air. You can go ahead and speak. Oops.
Hi, how are you all today?
Great. Thank you
Hi,
so much.
Lisa.
Hi, I apologize. I'm in New York City, so if you hear some street background noise, I apologize. Just a quick question about the DIY template. Is that set up for QSR concepts, or does it need to be modified?
Do you have seats at your QSR concept?
Well, I mean, we do. Yes, we do.
Okay. No, it's set up for QSR. You can just plug in,
Okay.
follow the template along. It's really just putting in your sales metrics, just that volume and total sales. And then literally typing in your food cogs, beverage cogs, type in your summary labor metrics, and then your OPEX you can bring in as well.
Okay. All right.
Yeah.
Okay, great. Thank you.
Thank you so much, Lisa. Thanks for asking.
Yeah.
Anybody else want to ask a question? So as I mentioned, we're going to send that Excel sheet over to all of you guys over email. We'll also send you guys this recording so you can follow up and in case you have any questions about this. But if you have any questions at all, please feel free to reach out to us. If you need help with your budget, we're always happy to help. But also if you have any other questions related to restaurant finance, like we are an open book, we are happy to answer anything that you have that you've been wondering about. So please don't hesitate to reach out. And thank you so much for joining this session today. We really appreciate all of your time, and have a wonderful rest of your day, and we'll talk to you all very soon.
All right. Thank you all.
Thank you, everyone.